Join us to get exclusive and rare access to some of the industry's best leaders. Leaders who will share all their secrets to success with you. Leaders who have closed thousands of successful deals between them, generating hundreds of billions of dollars. Leaders giving you the roadmap to fast track your career and reach the highest echelons of the business. So welcome to Series 2 of the Investment Banking Leaders Podcast, and best of luck on your growth journey. Hi, I'm Pete Nieberg, the host of the Investment Banking Leaders Podcast and the Global Head at Outram. And before this episode starts, I have a small favour to ask of you. We had just over 20% of listeners subscribe. And our goal in Series 2 is to increase that to 40. So if you've ever liked any of our episodes or our content, please hit subscribe. It helps the channel more than you can ever know. And the bigger this channel gets, the higher profile leaders that we can collaborate with to help you on your journey. So thanks for your support in this area. We also appreciate how busy you are, and we've added timestamps to all of our video content in Series 2, making it really easy for you to access the topics of most interest. So I hope that helps, and enjoy the episode. Really excited to introduce today's guest to you all. I have Karan Goyal, Managing Director of Group Strategy, M&A and Venture Capital at Emirates MBD in Dubai. Karan started his career back in 2012 working at a number of boutique investment banks, first in India at Arc Financial Services and Nucleus Partners, and then moving to Dubai in the UAE in late 2013 as an associate at Constance Capital. During this phase of Karan's career, he was involved in numerous M&A, PE and venture capital transactions across many sectors ranging from TMT, industrials, consumer retail and real estate. And in 2015, he decided to join the in-house group strategy M&A team at Emirates NBD Bank in Dubai. For those that don't know, Emirates MBD is the largest bank in Dubai and one of the largest in the MENAT region, with operations in 13 countries. And Karan has now been with Emirates MBD for almost 9 years, starting as a manager and growing rapidly to managing director level. Last year was a big year. A new setup for corporate venture capital fund was also added to his team's remit of work. In this time at EMBD, he has worked on developing EMBD's international expansion strategy and then executing M&A transactions to achieve it. And in addition to doing that M&A work, he's also worked on numerous strategy projects for the bank. Karan's a unique guest for us today. He brings a unique insight on how in-house investment banking really differs to more traditional deal making at an investment bank, and the advantages and disadvantages of why you should consider it as a career. So I'm really excited to get this one off and started. Karan, welcome to the podcast today. Thanks for joining us.
Thank you for having me, Pete. It's a pleasure to be here. And thank you for that nice introduction.
My pleasure. My pleasure. Thanks so much. So yeah, hey, let's start with you introducing Emirates MBD and what you do for your clients to our listeners.
Sounds good. So not all of your audience would probably know about Emirates NBD, but we actually are one of the largest banks, as you mentioned, in Dubai and in the region of Middle East. We are very proud of our presence and our heritage. We used to be, let's say, the central bank of UAE back in the day because the country didn't have any banking system. And it was using currencies of many countries. And at that time, it was National Bank of Dubai, which was supporting the entire economy. Over the years, the bank grew. In 2007, we had a big merger, which created a national powerhouse called Emirates NBD. We are present, as you said, in 13 countries. We have big operations in Saudi Arabia, in Egypt, in Turkey. We also have a branch in London, right next to Park Lane. So
Nice.
It's a very nice location. It primarily caters to a private bank, but in the region, we are a full-fledged bank servicing clients across corporate, retail, private banking, and we deal with some of the best global banks. So it's quite a big powerhouse in this region.
Excellent.
Coming to me, I work in the group strategy, M&A, and as you said, now the CVC or the corporate venture fund team. It's a standard team. A lot of global banks around the world have it. The only difference that we have is we are combined 3 functions, which is unique. And I think it talks about the team and the management, wherein one role which we have is obviously working very closely with our group CEO and the board and actually devising the key group strategic priorities for the organization. What becomes very interesting is actually executing then the transactions to successfully achieve. And one of the big strategic priorities has been international diversification. So you're not just doing M&A advisory for let's say, clients or building, as they say, sandcastles for them.
Mhm.
You're actually doing it for your own management, your own bosses, and then you have to execute it, which becomes quite exciting. Also shows you both sides of the prism, which is quite interesting. So in short, my clients are not external. My clients are my management, my CEO, my board. So it's very different perspective to when I was back in advisory.
That's great. Thanks for the introduction. And we're really going to jump into that and I think unpack that a little bit for those that are listening that are in maybe M&A advisory areas and interested to learn more about what in-house means and the differences there. And thanks for the intro to the bank. Exciting to be the first there, the first national bank. So great journey as well. How did you end up in investment banking?
Very interesting questions. I think that I should take you back to my journey. And investment banking really started, or let's say the roots, when I started my undergrad. And in those days, you'd do it in marketing, finance, or general. And I was like, finance seems nice. I've always been good in numbers. I didn't like marketing because I don't like hypothetical things. I liked concrete answers, doing analysis. So I took finance, and then one day they asked me, "You want to do quants or you want to do corporate finance?" And that itself was a question which I had no answer to. Quants was just hardcore numbers, and so I chose corporate finance, and that's the starting of my thought process towards M&A, capital advisory really started. Then I moved to London to do my master's at King's College, and I think London was a place where I really got the bug. You had these investment bankers coming in talking about all these marquee deals. We had open day in all the big banks in London. From University of London, we went and we saw them. And the most interesting thing which I always had in my mind is I didn't want to do a 9 to 5 job. One thing which I always wanted to do is something which keeps me excited. I was always willing to work hard. I always wanted to do something which sounds childish in a way or cliche. You have the newspaper headlines of your transactions rather than something else. And that's primarily the very basic urge which led me into it. In fact, I did my thesis on an M&A and for my master. So you could imagine within 1 year how much I was enamored by the entire mergers and acquisition deals. You read about them, you see how exciting the work is. And honestly, it is transformational as well. You really do set the path for the future organization. People don't realize, even back in the days when I used to read, some of the biggest organizations we see today, they're actually because of a lot of mergers happening together and people don't realize. So you do make a difference. So that's how I got into M&A.
Nice. The variety, the pace, the visibility of the deals all comes through a lot there from that intro. And I think I hear it a lot within the industry. The pace, the demands, the variety are key. So thanks for sharing. And just before we get into the meat of today's discussion, why don't you just tell the listeners one thing unexpected or unknown or they can't find about you?
I hope my bosses don't listen to this.
Okay.
No, but honestly, I love to play sports in general. I love to do karaoke. Maybe that's
Okay.
unique. I like adventure. I've done Kilimanjaro, I've climbed. So that's one thing, but I think a lot of people know it. If I have to say one thing, which probably nobody would know apart from 10 followers. So I'm not a big social media guy. I have no
Okay.
presence, but my partner convinced me to create an Instagram page where
Okay.
basically I write about movie reviews. So I'm big
Okay.
into indie movies. I've probably watched a lot of these movies which people have never heard about. So during COVID, when we had nothing to do, I started this small Instagram page where I write about these indie movies, trying to give them some coverage. And I think nobody
Nice.
knows about it in office or amongst my friend circle.
Maybe now will help you to go viral and get some of those reviews read and some of those movies to watch. Definitely. Thanks for sharing that. And very interesting. And I won't ask you to sing any karaoke today, but good to know you got the voice. All right. So as I said at the start, you're a unique guest for us and really want to try and unpack this in-house investment banking versus M&A advisory. So can you just start telling us a little bit about what is the real difference between working with an in-house team versus the standard M&A advisory area?
I think to really get into the details for your audience, what the difference, let's understand some similarities. So one thing is the fundamentals and the principles remain same. You still need to be strong in your modeling. You still need to be strong in your financials, analysis. So even when I was advising clients, doing valuation, thinking strategically why certain assets from an acquisition or investment perspective is good or bad, all those principles and fundamentals and technical skills remain same. Where the real big difference comes, and which I talked about a bit in my intro, is your client, right? So in advisory, you're constantly moving from deal to deal, working with new clients. Also, I shouldn't say this, but partly in some ways you are slightly detached because end of the day, the big incentive for you, although you always want to advise the client right, if a deal is not sometimes right for them, you do want to advise them to walk away. But sometimes it becomes a bit challenge given the motivation and drive. So you do a deal, you work really hard for the client, you do it, and then you're out, done. You lose it, you're already thinking about your next transaction. And the biggest difference working in-house is you're actually part of it. You will be, in a way, married to it if you do see yourself being in the organization for long. The great thing about working in-house is it gives you more ownership, wherein you really start to think, does this real transaction really make sense for my organization? Am I doing right by the shareholders? Will it in the long term add value? And we don't want in 5 years this transaction to be the reason why probably I get fired because this was not. And this is where one more thing, which is quite unique about being in-house, is a lot of the banks and even global organizations, they merge, let's say, the M&A strategy or the group strategy versus the execution. Instead of you just doing the execution of the deal, where you still need to be quite strategic, you actually are defining for the organization where we should even go and expand. So think about the entire spectrum, and you really start to get so much visibility and interest. And obviously, I think the other big thing in house is that you do get into a lot more details. You do start becoming specialized within the sector your organization is. So when I was doing M&A advisory for my clients, as I mentioned earlier, I worked in boutiques. You really are not sector specific. So I was constantly jumping from one sector. So you have a good idea about the matrix which works in the sector. But when it comes to now working for a bank for the last 9 years, I know so much details that even when I do the analysis for an acquisition, it's another level. So these are some of the key difference. I think on the personal life, which also is very important, I would say for the audience to know is you get a better work-life balance. And I think one of the reasons why I did leave M&A advisory partly also was I did realize that me as a person was sometimes having challenges doing those long hours on a regular basis. Don't get me wrong, I've done 6 a.m. many times in this job, but it happens not that often. I think there is definitely that emphasis on giving you both quality of work but work-life balance, which has been very important for me because I do really value some of the extracurricular hobbies I have.
And that's because the client's internal, so the demands
Yes,
are maybe less demanding than a short-term project, although I know some of these M&A deals are 6 or 12 months. That's what really sets the difference. Is that correct?
that is one, but you'll be surprised, and maybe a lot of your listeners will associate to it. Sometimes when you're an M&A advisor, it's not the amount of work which keeps you late in the office.
Mm-hmm.
It's honestly the entire coordination between so many parties, your lawyers, your other investment banks, your clients. You sit in office for hours and hours reading, waiting for some email to come in the client. It hits at 5 p.m. or 6 p.m. and then you start working all night. So in-house, the best thing is you really control the deal. So if you're there early in the morning and you're hitting the ground running from day one and you're controlling the pace, you might end up making your advisors work late, but you
Understood.
yourself can really maximize the time. So I think that's big. But yes, one thing obviously is that the expectation is slightly different. In-house, you're treated with a lot more work-life balance. But again, that does not mean that you are not, they don't have demanding timelines. You don't have to do long hours, but it's just a bit better compared to external.
Excellent. So I'm sure that's music to many of our listeners' ears, as many of our listeners will be in M&A advisory or in more traditional investment banking versus in-house, and probably are putting in a lot of hours as you did back in the day. What else would be appealing? I think you've touched on the internal client, not moving from client to client, but really building up that. You've touched on strategy and having a wider skill set, a wider view there, work-life balance. Anything else at all that's you think really appealing or a big advantage to moving into in-house role?
As I said, the point which I talked about getting into the details, right? So when you're on the advisory side, unless you become a sector specific M&A advisor, you really don't get that overview of the sector. And I shouldn't say it, but you reach a stagnation in the career that your opportunities to move are limited. Whereas when you go in-house, the beautiful part is now having the exposure of so many different operations in the bank. Tomorrow, if I say there is something else in the organization which I love, it could be a digital transformation, could be AI implementation, because I've gained the value and respect in the organization. I understand my organization. So if I say, you know what, I've done a lot of M&A, maybe not for me for life. I have so many different verticals I can move into. And that's the beauty, I would say. Although I do believe in investment banking also, like from an invest when you're advising clients, you do have opportunities, but I do believe that when you're in the advisory side, the older and the senior you get, it becomes a bit challenging to move into the industry. Whereas when you're industry, when I came in, I had the chance to move up really fast and build my credibility. And now I have the chance to always go back as, let's say, a fixed specialist, having worked in financial services, or I can even move into other verticals and say goodbye to the industry.
Nice. Yeah, they're giving that variety and that opportunity to grow in other areas. So I can definitely see that as a big advantage. Okay, so you're an MD. You've been involved in building your team there. So what are MDs looking for when they're recruiting for in-house talent?
I think it's a very difficult question in post-COVID world. I would say few things which are very important, and these are my views. I would not say across the table, but one thing is just the attitude. I've always believed that analyst associates having the right attitude in terms of willing to work hard, willing to put in the hours, willing to really give a big part of their lives, because people don't realize, and I say this very often to my friends, in investment banking, yes, we do for a lot of people quite technical and difficult work, but end of the day, we give a lot of time of our lives in the office. And if I won't be doing that by having a smile on my face or actually doing it, and as I said earlier, if I don't really want that sort of a life, I'll be miserable. And I'll make sure my colleagues around me, my bosses, my juniors. So one thing which is I always ask anybody when doing an interview with analyst associates, guys, have you thought it out? It does sound very cool, sounds very sexy. Are you willing to give that part of your life? You'll be seeing me more than your probably wife, girlfriend, your family. And if you can do that with a smile on your face, then the technicals, those things, we can always work on people.
And when you're recruiting specifically for an in-house role, are there particular job titles, seniority, and departments that you're looking for to bring through talent?
Good question. So I think when you're in-house, one thing is that if you're hiring somebody senior, if I'm going to be hiring a senior director, they need to probably be in a bank doing similar role, because that means they've really understood the banking industry very well in-house. Or they need to be an M&A advisor, but in the fixed space. So when they come, I don't have to start explaining them the details or technicality. Obviously, they will have a learning curve, but not as much. When we hire analysts, let's say right out of the school, how investment banks are, that's easy. You have to really spend time with them in building the fundamentals. Or when we hire investment banking analysts and associates, those guys, we don't really care about the sector. I think as long as you have the basic technical skills in terms of you can work on an Excel, build a good model, you have a strong financial analysis skills, you can build good PowerPoints and give your story to the client. I think those things we need, and then we can work with them and train them in terms of the technicalities and the nuances which come with the industry, whichever one in-house is, right? I'm going to give the banking perspective, but other people out there can work with those people and train them in their respective industries.
Excellent. So your take, if I understand it correctly, is if I'm an analyst, an associate listening today, and I'm excited about some of the things you mentioned and advantages to moving in-house, then I have got the skills, and realistically, I should be able to make that transition with the right amount of training.
Absolutely.
Let's talk a little bit about the disadvantages. So what do you see on that side, on the flip side of the coin, so to speak, between in-house and the advisory side?
Difficult for me to say because I'm very happy with my choice. It's worked out very well. But one thing which, again, on the top of the mind, although I'm not sure exact data, but pay. You definitely don't get the pay when you're on the advisory side vis-a-vis in-house. There is a pay difference. But as I said, I do believe that based on the work-life balance you get, the pay is quite fair. And it's if I'm willing to put more hours and non-stop, then the pay is compensated higher on the advisory side. That's one thing. Second thing, I don't know whether it's good or bad, but this is a big difference, which has been challenged for me also partly. The sort of nuance of advisory versus any corporate job. So not just investment banking, where in an advisory, you have a very lean team and you're working with clients. So if even at an early age, which I was, even at an analyst associate stage, I remember whenever I got any chance to speak to clients, I was usually decent at it. So my MD, my vice president would be very happy to give me more access because he was like, okay, Karan, I'm not worried that you're going to say something wrong to the client. In fact, the clients respect your views at a young age. And I grew quite fast, right? In a corporate world, the entire contour of a hierarchy where it's a bit more hierarchical, you have multiple and multiple layers of management above. There are a lot of, I say, cultural nuances also which start coming in. You're dealing not just with a 4 or 5 people team. In-house, my team might be that big, but I'm dealing with thousands and thousands of people in the organization on a daily basis. And I think the skill of navigating internally within a large corporation, working in that hierarchical environment can wear a lot of people down. It can become difficult because I do believe that's a soft skill set which is very different to just working in a lean team and then working with clients more. So that sometimes can be challenging. It can also sometimes slow down the progress of your career, although touch wood, it's worked out very well for me. But I know some of my friends who've also done the move. It's a lot harder sometimes in a corporate to move up when you're good. If you're not good, and I'm very strong believer in that, then obviously you will not move up that fast. But in an advisory space, if you're doing well with clients, your MD is going to give you more and more exposure, irrespective of the age, irrespective of the title. And that just makes it more exciting.
Yeah, no, definitely. That's come up again, and the exposure and being able to connect with bright minds who are running businesses and involved in large transactions. So let's talk a little bit about that transition. You've really shared some great feedback on what's great about working in-house and some of the challenges, the ones we just talked about, pay and navigating larger teams. If I am interested in transitioning from an analyst and associate role in advisory over to in-house, what sort of things do you recommend I do to prepare myself for that transition?
One thing is, wherever you're applying, whichever industry or company, do a lot more research. I know we investment banking generally are very good, but you have to realize that if you're willing to move in-house, you will be exposed to a lot more details. Detail is the king. In investment banking, sometimes, yes, people say that because it is important, but when you move in-house, it's another level. If you look at 50 matrix or KPIs when you're advising clients on a deal, you move in-house, it's 300, right? So is it for you to get into all those details? Do you like really ripping things apart? Or do you like to go to a certain level, package it nicely, help the client do the other analysis in-house, and then move away? So if you're moving, ask yourself the question, am I willing to spend more time going into the details? Does that excite me when I have to get to the bottom of the table? And when you're doing the interviews to prepare yourself, do a bit more research, dig about the company, look at their key principles, because these are some things which will definitely be asked when you'll be doing interviews, especially at an analyst and associate level.
Yeah. And any advice on, when you say a lot of research and detailed research, any particular advice on how to go about that or what level to go to so that I am showcasing my talent, so to speak?
I would say the same thing which we do analyst associates and advisory. Go through the financial statement. Sometimes people are surprised. There is so much information sitting out there in the public domain, the financial statements, the investor presentations. Read those transcripts of the analyst calls which the CEO and CFO has had. And usually there are some very good snippets on their M&A strategy, the growth. I mean, just an example, you listen to some of the European banking CEOs from Davos and see their interviews. Most of them are talking about M&A. So imagine if I'm interviewing for one of those banks. I go to the interview having read, having heard that strategy right from the top boss. And then I can correlate that into my interview and overall thought process that I'm joining, because this organization seems to be the top management in this forum is talking about it. That's what excites me. And it actually should excite you. I always say don't do an interview just to get a job. Because, and again, this is not for everyone, it's people who are really good, because wait it out, find the right company. It's very important. But I would say narrowing it down, do your research, read a lot online, try and build that story about the company and their aspirations when you go into the interview, so that the interviewer can feel the comfort that yes, at least you are excited because we are a very strong organization and going in the right way, so you have done your research.
Excellent. Thanks for that. I think that's definitely helpful for the listeners today and can put that to work and better prepare for those situations. I want to move on a little bit to VPs. I think there's a lot of support and information out there for grads getting into investment banking and even those at the more junior level. And this podcast certainly aims to help that along as well. But the VPs are the nearest ones to MD role. I don't think there's as much support out there for them. So have you got any key advice for vice presidents looking to make it to that managing director level and what can make it easier for them?
I was there last year,
Yeah.
beginning of last year, so it's very recent for me. One thing I would say, it slightly differs when it comes to in-house versus advisory. In advisory, in my experience, when you become an MD, you're managing the client. So you need to have really strong interpersonal skills and network amongst those client base. And you could be the best out there in terms of technical skills and execution of a deal, but the firm would not promote you to an MD, even an ED, if you don't have client sets. So realize that it's nothing bad on you. And this is what I tell even my team sometimes when they discuss about promotions. I'm like, don't think that promotion is looking down upon you. If you have to make that role as a VP, ask yourself, this is common knowledge out there. What are the key differences in the role shift? It's not you getting better in what you do, but I think you're doing something else. Although at VP level, you do manage a lot of clients. But when you become MD, there is nobody above. You are expected to drive the revenue, right? On the advisory side, you are expected to make sure that everybody in your team is getting paid. Now, that's an added responsibility which comes in. So once you start realizing that and go through every transaction, every engagement with the client with that mindset and build those relationships, it's an automatic promotion. I believe that when you're analyst, associate, even associate vice president, you can still work on things, maybe even push your organization or your team, your manager, your boss to move you up ahead faster if you're good. But once you reach that threshold of VP, it's more about a different sort of role which you need to take, and you need to be ready for it. It's not bad. Some people just are not good for it. Whereas on the in-house side, it's not that different, but in-house, since I don't have clients, for me, what's very important and the move for me I made is my organization confident in me to call the right people and get the right information. So have I, through my VP years, even my late associate senior manager years, whenever I got chance to work with advisors, with industry experts, have I built those relationships? Can I call upon them? Are they comfortable in sharing with me? Do my management trust me to get them the information, to get them the deals, to get them the networks? And that's been the big transitioning for me as well, that I can now not just focus on work, but I can actually deliver a lot more. And one more thing which is important for any VP moving into an MD role is you have to demonstrate that you're a great manager and team builder. So going through that cycles of hiring analysts and associates, although they're not directly under you, making sure you're getting the right talent in, making sure those people are growing up, a reflection of a team. These are all common knowledge. I think I'm repeating a lot of these things, but at a VP stage, the reflection of the team you've built underneath is sometimes looked upon with much importance when you're getting promoted, because then they know that if we put him at the top role or managing that team, he will be able to continuously make sure that the team is sustainable, people leave, people go, he'll be able to build them on, because you are also ultimately responsible. The organization needs to keep working, the work needs to be done.
Okay, super. Lots of great tips in there. And I want to sit on networking because that came across loudly for both in-house success and, of course, on advisory. And we hear it a lot on this podcast and within the industry. So can you tell me a little bit about how you become a great networker or you build that robust network that you need to help you get to the higher levels of the role?
Absolutely. I would say there is no set formula. Everybody makes his own niche, his own sort of relationships, his own sort of impression on people, right? You could be very technically strong in your work and speak the right things, not be outspoken, and you can still gain a lot of respect of people out there that they give you a call, they listen to you, they trust when they talk to you because they know they're not going to get a lot of BS. You will be straight talking, giving them the right facts, telling them sometimes, even on an advisor side, when I'm working with advisors, if some of the advisors know that Karan would just tell them that he doesn't like it, just stop the BS. People like it. It's sometimes the personality match, and then you really start seeing that a lot of people are calling you. They're willing to take work from you. They're willing to connect with you because you build that rapport of working with them. So I would say be yourself, define how you want to shine out, because when you do build that strong rapport and respect in other people, that's the foundation of networking. It's not just about my title, it's about whether they respect me as an individual, they respect me for my work, and they do want to work with me because they actually enjoy it. That's one. Second thing is, and these are my views, you need to have that overall sense of relationship building sense, that it's sometimes not just about work also. When
Yep.
you're building networks, it's very important to go out with people, be open to going out, discussing about other issues, having that wide variety of knowledge. You'll be surprised. Investment bankers might be seen as just people who work all the time. Having those extracurricular hobbies, having those other hobbies, you connect with people, you connect with them immensely when you discuss these things. And these are the sort of relationships then you start taking. You'll be surprised. I have so many people out there right now on the street who were analyst and associate when I was that. And we were the ones working late at night, and we built these great rapports talking about these. I used to play tennis with one of them still. You build these relationships, you build these common hobbies, and then you suddenly start realizing 6, 7, 8 years ago, hey, we all have grown up together in some ways. It's a great thing that we built that bond early. We connected. We it wasn't just about work. We went out. We put that effort into the relationship. In short, be open to putting in the effort. And it's not sometimes always about work. Talk about your hobbies. Talk about build that personal relationship with people. It goes a long way. It goes a long way.
And do you feel that's been affected post COVID in terms of the office environment? Because I know it might not be for your personal situation, but I've heard globally many banks are back and many of the teams are back 5 days a week, but there's still many that are in the hybrid way of working, so working from home and in the office. And I've heard that this could potentially harm that networking, that relationship, that culture. What's your take on that?
I agree to that. I'm a big believer of coming to office. I've never worked from home unless it was, mandated by the government. I do believe that personal touch, meeting someone face to face is completely different. Yes, you can get work done. There is no doubt about it. COVID has taught us all that you can get work done on Teams, on over the video calls. But to build that relationship, which we were talking about, to even think about not just what's on the table, but the next few things, those things you need to be interpersonal. Luckily, where I am in Dubai, we were open before most parts of the world. We had physical meetings from in late 2020. I was back in office on a daily basis. And now everybody is flying in. And you can see it. It's not just banking, I would say. I think across the industries, a lot of industries which do rely on networking, they're asking people to come in. In fact, slightly diverting on the topic, this is one thing I will tell all the analysts and associates out there. Because in my team also, and I hear about this thing about smart working, not working too long, not going to office. I respect that. And I do agree we need to all change in the way we were working, learn from what we've learned from COVID. But don't ever underestimate the importance of being in office and even networking with your colleagues. In future, they might be the MDs or CEOs of organization, even people within the organization. So even if you're working for a bulge bracket or like mine, you come across not just your team, but so many people when you're there in person. And those networks, you'll be surprised, sometimes goes very long way. And you just simply can't do that. Another example is most of the time, I learned how to deal with clients is not because somebody told me or taught me. It was because I was taken along on drinks when we were traveling on transactions. I was taken along on dinners, on those meetings. And then you start observing, you start chipping into the conversation, you start building your own relationship. And these things should not be underestimated. Although, as I said, there is a balance, but it is definitely very important.
Yeah, definitely. So thanks for that. And I think you raised some great points. Being genuine, being honest, like letting your work shine, the relationship building part, putting yourself out there, connecting with people, getting to know people, been key for you in terms of that networking. Are there any particular events that you go to or you recommend that are really good for networking, either in your region or globally?
Not for me. I think there are some great events which happen across Europe and US also. But I think in my industry, and that's slightly different, there are some banking forums which happen, but they're not exactly for investment banking. So I go to a lot of forums on the future of banking, the banking things, because over there I'm learning about technologies and what M&A or investment my organization, as I said earlier. So probably not the right person to give advice purely from an investment banking perspective. But one thing I would do encourage for all the people out there, these events sometimes are looked down upon. You should try and find the one which fits you well because they do also help in your networking. Plus, they broaden your horizon in terms of the changes. Our society is going through massive change, especially with the advent of technology. And some of these, maybe not industry specific, but some of these cutting edge events which I've been in the last year, they've helped me think about when I'm thinking about an M&A now. Is that organization investing in that? Should I give a premium when I'm doing my valuation for that organization? And some of these things are quite relevant.
Yeah, perfect. No, I appreciate that. And I guess you've led me that way really about technology and things that are changing banking. And I know you're got a strategic mind, that's part of your role. So what do you see coming in the next 12, 24 months that could affect banking globally?
Very good question. I think this question has been on the table for the past 15 years since the rise of so-called neobanks across the world. And banking itself, even before COVID, was trying to transition and move to the customer needs in the digital age. Quite, I think on a broader scale, one thing which I do believe the banking will change going forward is it will become a lot customer centric. I think long has banks enjoyed that monopoly of the services they offered, which allowed them to work in a very rigid manner for a very long time because they knew people needed them. They knew that they have to come to their offices, sit there in queues to get their small transaction done. But now with the, how should I say, the financial inclusion drive, which is happening across the world, you have companies out there which are providing you solutions with such good customer experience, right? And there are industries out there which have completely outpaced the banking industry in terms of customer experience. So I think going forward, although I do believe banks have made already quite a lot of progress there, but banks going forward have to really start thinking like consumer companies more, how your consumer durables or F&B companies work. It will not be so stable. Customers won't be sticky. You can move your accounts now super easily with the advent of open banking. The competition is a lot more stiffer. The entry barriers are becoming less and less. So I do believe going forward, the biggest change you start seeing is when you think about companies which you like for their customer service, surprisingly, there might be some few banks in there which you could not have thought about 5 to 10 years ago.
Yeah, no, sure. Thanks for the insights. And yeah, I'm sure you're right. There's lots more to come in that area, and banking can definitely pick up and move a bit quicker, I think, in regards to that kind of customer service area. Thinking more into leadership. This is a leadership podcast, and many of our audience are aspiring leaders of the future. So one question I have, to reach the leadership level in the financial markets, it's one of those industries that's ever changing. We know that. And I think the last year, we've obviously seen quite the year in terms of how things have changed. What advice do you give to those wanting to reach leadership level to be successful in that ever changing environment?
Honestly, it's a very difficult question because when I look back also, and I do that quite often of my career, and I try and think about what were the right steps I did, what were the right decisions I made, which led me to come here, and there's still a long way to go, hopefully. And even my team, this is a question because one thing is I was never demanding on review or feedback from my managers. I always had this principle: if I'm getting work, if I'm super busy, and if I'm getting the most complex deal, I'm doing good, right? Work always speak louder than word. But nowadays, even when I talk to teams, my team, and they talk about how can they develop themselves into a leader, one thing I would say is to be any sort of leader, a young leader, a middle level, because I do believe even a middle level manager in an organization is a leader. He is leading some people, he's impacting. So one thing is you should take away some skills which are needed across leadership, right? Like you have to be an example for your team. You just simply have to be. If you want to become the leader and everybody around you to see you as their leader, you need to lead by example. And what I mean by that is there is no shortcut to success. So if you're always in office on time, you're always working hard, you're always putting in the hours and efforts, trust me, this rubs off. And people really start looking up to you and start saying, okay, I'm willing to follow this guy, or I'm willing to do as he's doing. Don't underestimate the impact you have on your colleagues around you, on your leaders. So bring that A game onto there. Don't ever stop working hard. Don't stop ever putting in the hours. Don't take those for granted. And always be like an analyst into learning. How we were analysts one day, and when we saw all those models, our eyes lit up and we saw all those presentations. As we discussed just before, the world is changing, right? So you don't want leaders who will be dinosaurs, who will let you and your organization and your team perish. You need leaders who have that keen love for learning. So I would say there is no set template for leader, but if you as an individual are hardworking, if you're putting in the hours, if you're somebody that people in the masses look up and say, God, this guy is always there. This guy is always putting in the hours. They start respecting you. They start saying, okay, this guy can take up because they know you'll be there. And if you're constantly learning and leading, people again keep coming back to you and they start respecting you because they know that you are either very good at going in and learning something because you have that keen knack of getting, or you're already reading about it and learning. So they're safe in your hands from disruption. So you have to really create that overall personality and the aura to let other people really trust in you. They can just say, okay, leave it with him, he'll get it done. Or your team saying, okay, I'm in good hands. So some of these basic skills cannot be underestimated. These are very important in being a good leader, or even going up in the ladder, because a lot of people start forgetting things which got them to certain places and think, oh, what else do we need? No, what you did, those are the most important ones.
Yeah, I definitely agree with you. You talked a bit earlier about building a team and building successful teams as you reach VP level. seeing what you've done to build a successful team has a big impact on getting to MD level. And I agree with you. You talked there about role modeling and inspiring by doing is the phrase I like to give. I think if you're in the trenches with the team and leading and guiding and showing that you can get stuck in and do the work is key. And the growth mindset, I also agree with you, I think is key for any leader. And at the moment, things are changing so quick. To keep on top of that and how you can use initiatives and tools to change the business is key. And I'm sure the team are looking to the leader for that. What has helped you grow and develop as a leader outside of the experience of doing it? So have you had training, mentors, books, podcasts? Is there stuff that you recommend the aspiring leaders should do?
One thing is always be a sponge. So if you are an aspiring leader, and if you're working in investment banking, where as we discussed, you do come across a lot of great leaders in your work or top management, be a sponge. Always observe how some of those people in those leadership positions are working. For me personally, it's been a great experience. I do believe either be in my perspective, a bad manager I've worked with or a good manager I've worked, every single aspect of their observing has made me a better leader. Even seeing some of the things which I used to resent or did not work with my peers from my manager has helped me change. So observing, learning, and always looking at other successful leaders does help a lot. I think it's one of the best benchmark. The other thing is have a certain core values that for any aspiring leader, those are, if you believe of doing things in a certain way, and as long as you believe they're right, always be ready to change it. Stick to those, impart them in your team, work with those ethics because they do really go up. And one thing which again everybody talks about is very common is humility. You'll be surprised the best leaders out there are the most humble persons. I go to some of the forums thanks to my job and role and meet some of the big CEOs of large companies, the most down to earth people talking about the simplest things in life. Crazy. I've had conversations with CEOs of global companies talking about philosophy and small things, talking to you on a very human level. Whereas I meet a lot of middle level managers who think as if they're the king of the world. You have to realize what I talked about earlier. You need to develop that personality that people are attracted to you. Don't underestimate the importance of a leader. He doesn't have to be technically smart. He needs to have that presence, that personality that people are willing to follow him. People are attracted to him. So do focus on these things.
Yeah, definitely. I think they're skills that you learn through experience and certainly from learning from those that do it really well and those that do it badly too. So I like that reflection point. What about the culture of recognition that leaders build? I always feel that investment banking gets a bad reputation for team recognition. What have you seen and how do you feel a recognition culture can be established within the investment banking industry?
I've never had that experience. Touch wood, wherever I've worked, all my managers, they've actually driven a good culture when it came to recognition. In fact, one thing which is great and I love about investment banking is you really start making tangible impacts, right? Instead of some other roles where you really don't see. So, from my perspective, the recognition is very important to drive and motivate team. You'll be surprised once you create that culture or you work in a culture where you're recognized for your work, you're praised for your work, you work for 30-40% less salary. People out there are willing to move and change roles because there is this Maslow's hierarchy, as they say. There is this internal satisfaction. You need to be recognized for what you're doing. So having that culture is so important, and especially in investment banking where you're working or you're asking somebody to give you majority of his life. You're giving good 10, 15 hours in a day in office. You're not just doing that for the money. You're doing that for the satisfaction it brings you when you do that thing and somebody says, hey, great job. Because if some big deal has happened, some big organization or a great organization has been created, and it's very important. Don't take it for granted. Any leader out there, don't take it for granted. Every single recognition which you get, or probably you got, or you give to your team, goes a long way.
And is it recognition email in person, or have you seen other examples of recognition done well in the industry, or even tools being used to do it?
It all depends. I remember I joined this organization as a young manager, and after 6 months, I got an email from my CFO. You can imagine it's a 30,000 people organization.
Yeah.
I was just a manager, right? And the CFO wrote one on one to me. I've heard you've been doing well. Keep it up. Trust me, went a long way. Went a long way. My entire satisfaction, comfort which I got from all the hard work I'd put in, all the anxiety I'd had, and because there was a lot of anxiety when making the transition, all of that went away in 1 minute. So I wouldn't say there's any set parameter. I like to talk usually. I'm not a big believer of social media messaging. I usually hate all sorts of messaging tool. I like to just talk. In fact, one thing I do believe when it comes to recognition, be open. When we talk about recognition, also be open about when people are not doing well or when they can do better. And don't hold it back for those once in a year or twice in a year feedback. If you're going to recognize somebody once or 2 years or something they did 6 months, 3 months, 2 months ago, you've already lost the enthusiasm. You need to give those recognitions, even feedback, may it be good or bad, quite close to when things have been done. Because you don't realize we are human beings, right? So for us to register certain things and be able to dissect from somebody else's perspective who's giving it, if it's closer to the event, it just becomes a lot easier. So don't shy away. We give more feedback, give more recognition if deserved.
Yep. No, I guess powerful example you shared with the CFO there, and I can understand why that was motivating, and that's what I'm getting at. And I said investment banking does get a bad name in this area, but I think it is going on, and there's a lot of great leaders out there that do care and do have good recognition practices. So it's interesting to hear your take on that, and I also agree with you. In the moment is so important. In the moment, and clearly recognizing what the win is or what the success is, so it connects, is critical. Unbelievably, we're coming towards the end of the episode already. It's shot by. I do want to take a couple of questions in terms of the wrap. So first of all, going back to your first day in the industry 20 years ago, 20 plus years ago, looking back now, what's the one piece of advice you'd give yourself?
Don't worry about small successes and failures. It's easy to say, but when something goes wrong, it's sometimes difficult for me to sleep. It was a lot harder 5 years ago, 6 years ago, 7 years ago, 10 years ago. But I think it's partly human nature, but partly always think of the big picture, right? If we are healthy, smart, as I said, hardworking, we will have a decent career. Even if AI comes in or transition comes in, if you're keen to learn, if you're hardworking, I think people out there would want you still. So don't stress yourself out because I've lost a lot of hair. I've impacted my health. It's a long game. Things will sometimes not go right for you. There will be time when you think your credit has been taken away from you, your peers have been recognized more than you, or you should have done more. End of the day, this is part and parcel of the game you signed up. In the long run, it always evens out. So I tell this to a lot of young people. I have great people in my team who I see sometimes really panicking or stressing if they're not being put on a deal. I'm like, you think this deal is going to define your career? You're going to have a 40-year career after now, because with the advent of technology, we all will be living longer than our ancestors. And one deal, you'll be having hundreds of this. Tomorrow, you could be working in a completely different industry. So don't worry and stress yourself, because that does impact your health, does impact your love for the work. And I think a lot of people today, sadly, or good people today, are leaving the industry or walking away just because they're not able to manage that stress.
Yeah, it's funny how often I ask leaders this question, and a lot of the responses I get are not to sweat these things. So I guess that's the wisdom that comes with the experience and having done it right. But it is great feedback and very difficult sometimes to get out of that when you're in the challenging or when you're early in your career. So thanks for sharing that again.
As I said, it still happens to me. It just become better.
Mm.
Earlier, I would stress, but this is something you have to work on. And I'm sure even the biggest leaders out there, they're also going through it. Maybe they become very good at hiding it or overcoming it, because this is also important to leadership. If you show that sort of anxiety, stress, or sweating over things to your team, I can tell you morale will be gone within seconds.
Yeah, they're certainly looking for you to be vulnerable, I think, is key and genuine, but to be confident and to certainly know the direction out of the troubles or challenges you have, right? You talked a lot about sport and movies and karaoke. What types of things do you do to drive that work-life balance that makes you a great leader?
I love tennis. It's a great de-stress for me. I always believe that having an active lifestyle really helps your productivity in office. Unluckily, we got, at least me and a lot of the listeners have signed up for a desk job where we sit on a table and chair, which I think we are not meant to. So we need to go out there, because there are chemicals. You can do research. There are chemical evidence that when you do actually play some of these sports, like when I have tennis, which I actually love, you completely stop thinking. And even to my earlier points, you're sometimes realizing stressing about a deal, it's all right. Life is bigger. So for me, playing sports is a big thing. I'm seeing a lot of youngsters today who don't have hobbies, which is quite surprising for me. When I was growing up, all of us had a sport or two. I play three sports right now,
Mm.
right, on a regular basis. All my friends, everybody had one, two sports, had some sort of another hobby or some sort of an activity which you do once in a year, but you make it a habit to go. Build that around you if you want to have a success. You don't want to be just a person who's just doing work 24/7 and going home and sleeping.
For
You
sure.
know, you need to have that well-rounded thought process. You need to be fit, healthy, excited outside. You will bring that happiness to work.
Yeah, I think the moving's definitely key. And if you talk about the stress, the previous a couple of minutes ago, mobilizing, it helps get that out of your body for sure. And having a habit, gym in the morning sets me up for the day and make sure that I'm right and in the right mindset and ready. Sports as well, I agree with you. The more you have and the more focuses you have outside of work, the better you're going to be in work. So thanks for sharing. Final question from me, Karan. Anything I haven't asked you that you feel the audience should know?
One thing I would say is that from my personal experience, specifically now talking to your audience in terms of investment banking, over the years when I probably was studying, investment banking was the coveted job in many ways. We were studying to get into it, the name, the excitement. Then the technology came in, AI came in. Nowadays, investment banking is just one of the works which the top talent out there is searching for. So I would just say one thing to your audience. Investment banking or just M&A advisory, irrespective of whatever happens, is still very unique. It gives you exposures to so many things out there and so many things which are changing, and you're always on top of it because you're helping your clients or your organization. So I would still encourage everybody. It's maybe not the most coolest career out there now. People like to wear their hoodies, no more ties, and go to work. I still do believe that it's something which, if it's right for you, can give a lot of satisfaction to people.
The tie is definitely rarer these days. But thanks for the feedback. And there is so much to investment banking and the passion you have for it comes through. So thanks for sharing that. And thanks for being here today. As I said, I can't believe it. It's flown by already an hour. Ton of great insight. It was really interesting to get your take on in-house. I'm sure that's given the audience a lot to think about today. Loved a lot of the stuff we got into on leadership and networking and, of course, how to succeed long-term in the industry. So, Karan, thank you so much for giving up your time and thanks for being here helping our listeners today.
Thank you for having me, Pete. It was a pleasure. Thank you very much.
Thanks so much.
Have a
You
great
take
day.
care. This episode was brought to you by Outram, the global leaders in the financial deal gift, awards and recognition space. So if you need any assistance in these areas, don't be afraid to hit me or the team up. I really hope you enjoyed today's episode. Thanks for joining us. And until next time, best of luck on your growth journey.